Hi, good afternoon, everyone. We'll just wait for a few more seconds so you can settle in, have some finish up your lunch and grab some water. As this is a very informative and engaged webinar, and especially with today's presentation with Lillian Urbant. Also, some housekeeping items. This webinar is being recorded. So in case if you have to step out, answer a phone call, we'll be able to provide you the today's presentation along with the recording as well. So if there's anything that you missed out, by all means, you could use it as a reference, and as well as you'll have our contact information on how we can address some of your small business needs, especially on a topic as important as the small business taxes as well, to some extent, as to how we're able to assist you. So once again, my name is Jesus Padilla. I am the manager of administrative services here at the Florida SBDC at FIU under the Miami-Dade Business Navigator. Next slide. Just a brief description of what is the Miami-Dade Business Navigator program. It is funded in part through a cooperative agreement with the U.S. Small Business Administration. Next slide. What is the Miami-Dade? What is a small business community navigator program? What is it? Well, it was established in 2021 under the American Rescue Plan Act, in which it uses community navigator approach to help small businesses with the economic recovery. The overall program is comprised as the lead hub, in this case is the Florida SBDC at FIU, at the center of a network of spoke organizations that will deploy community advocates to work with small businesses on the recovery and resiliency, in which 51 grantees were awarded for $100 million, funded into 3 different tiers: the national, state, regional, and the local level. In the Florida SBDC at FIU, we were able to obtain the state tier. Once again, what is the overall goal? It's to improve the long-term economic recovery and resilience among small businesses, the small business owners, with the main focus on businesses owned by veterans, women, as well as the socially and economically disadvantaged individuals. As such, not only are we the hub, but we also have the other spokes, other small business organizations to assist you. So think of it as the overall community assisting you of 6 organizations at your disposal. We have an Ascendis, we have branches, the EDC of South Miami-Dade, the Miami-Dade Chamber of Commerce, Prospera, South FIU Procurement, and the Florida SBDC at FIU. All these specialized business consultants can assist you to address your business needs, if it's access to capital, marketing, business planning, government contracting. We have those specialized consultants to address them and assist you on that front. So how is the Miami-Dade Business Navigator to assist you? Well, this program is to assist businesses are physically located in Miami-Dade County. And once again, the overall focus is to create that local navigator network to assist the socially and economically disadvantaged businesses with consulting, the mentoring, and the trainings as such you're in today. And once again, we're partnering with businesses that are minority-owned, women-owned, veteran-owned, and LGBTQ-owned businesses. If you're interested for more information, I will put the information in the chat. And also in the last slides of today's presentation, we'll also have our contact information. If you're interested to meet with Lillian or other business consultants as well, follow us on our social media channels that will be able to have updated events and how we could communicate on to address your business needs. So once again, if you have any questions, by all means, put them in the Q&A, and throughout today's presentation, I will be able to moderate them for you on your behalf so that Lillian will be able to address them. So once again, the webinar is being recorded. The presentation will be emailed to you. And also throughout the chat, I'll have some additional information to assist you and enhance the conversation of your business needs. So I know that y'all came not to hear me talk, but obviously to learn more from Lillian and today's presentation. So without further ado, allow me to introduce you to Lillian Urband. She is our business consultant from the Florida SPDC at FIU. And Lillian, the floor is yours.
Good afternoon, everyone. My name is Lillian Urband, like Jesus introduced me. But the first thing before we start, I would like to make a disclaimer. The following information is intended to provide insights on common tax considerations faced by small business owners. As it is not possible to cover all scenarios or circumstances, there are many other considerations or steps that you will want to follow up, which are not included in this review, including legal and tax-related issues. For assistance in better understanding any legal or tax obligations for your business, it is highly recommended that you consult with your accountant, your CPA, or your attorney. Business attorney is preferable for any additional information in these key areas. And we are going to start. Before I start, I just want to tell you something. Small business tax consolidation. Tax is very easy. You just need to learn to follow what the IRS code says. Tax planning, that's exactly what you're doing. Your best friend should be the IRS website. Tax planning is an art. The art of arranging your financial affairs in ways that postpone or minimize taxes. You are not trying to not to pay taxes. You just want to pay your share of taxes, what is considered tax planning, which should be done between you and your accountant or CPA at least every 3 months to see where you stand. If you learn and practice tax planning in your business, cash flow increases. Why? Because you are reviewing those financial statements so that you know exactly what you need to do. When cash flow increases, you have more money to invest in the business. Very important, the word invest in the business. That doesn't mean that you're going to take out more money for yourself. Remember, you as a person, you are one entity and the business by itself is another entity. I hear a lot of people say, oh, I own this company. No, you don't own the company. It just happens that you either a member or you are shareholder or you are partner. So you have to make that distinction. Tax planning includes the timing of income, the timing of purchases, and planning for expenditures. Tax planning can include saving for retirement. You can have a SEP, SEP, self-employment pension plan. But that can be accomplished if you review those financial statements at least every 3 months. The business decisions you make during the year will affect your taxes at the end of the year. That's why I keep emphasizing every 3 months, talk to your CPA, to your accountant. The beauty of this program is that we provide that type of services. We don't tell you how to invest the money, but we can go through the financial statements to teach you how to read them and see how the business is doing. The business decisions you make during the year will affect your taxes at the end of the year, as I said before. So it is important to plan and learn about tax changes. The code, the IRS code changes. I have been doing taxes for 25 years. I'm a tax practitioner, but I never just said, oh yeah, this is what happened last year. No, every year is different. There has to be maybe a little change, a big change, whatever it is. So that's why I mentioned at the beginning, the IRS website should be your best friend. You as an entrepreneur, there's no secret that we spend many hours planning how to make our business successful, and we trust other professionals to help us with tax planning because we fear the unknown. I could have been a doctor. I could have been a psychiatrist, but I choose tax because it's not challenging. It's just you follow the code and you're in good hands. Don't be scared. Taxes are simple to do. Each business is legally required to pay taxes and keep accounting records as a consistent year schedule called a tax year. We have two calendars. One is the calendar year, which is from January to December. And then we have the fiscal year, that many times the fiscal year is also January to December. But some companies, they decide that their fiscal year is going to, like the government, right? It's July to June. It depends on the needs of your business. I have non-for-profit corporations that their fiscal year is not the calendar year. And I always recommend, my recommendation because of experience, to have the calendar year the same as the tax year, meaning from January through December. So the question should be, what happens if I register in June of X year? It does not matter. The first year will be a short year, which the IRS allows you to do. You can set the short year from June to December, and then the following year, and from there on, you will be on a fiscal and calendar year from January through December. The first time you file taxes, you have to select the tax year. So that's why I went into the explanation of calendar year and fiscal year, whatever meets your needs. Talk to your CPA. The beauty of this is that even though if you select a different calendar year, you have to request a change with the IRS. It's not like your accountant can say, oh, this year I'm going to be calendar, this year going to be fiscal year. No, because it affects the tax forms. It affects when you have to report them. It affects the financial statements, because now instead of running calendar year financial statements, you have to run year financial statements. And that is a little bit more complex, which let me tell you, the more we do as accountants, the more you're going to be charged by your accountant or your CPA. So be consistent. That's where we are here for, to guide you through the process. If your business does not have much reporting or bookkeeping, you might be required to use the calendar year. And again, I even put the website to the IRS, the link to the website to the IRS. What do you have to do in tax planning? You have to use the tax basis of accounting consistently. Again, you can change it with the IRS, but you cannot just do it on the form. You have to request it. You have to get a determination letter from the IRS. You have to let them know that you plan to change it, and the IRS has to authorize it. You cannot change your method of accounting once you have selected. Again, you can do it, but you have to request the permission from the IRS. There are three methods of accounting. We have the cash basis of accounting, the accrual basis of accounting, and the hybrid method of accounting. Very simple. Cash basis of accounting is the easiest one, because you are going to recognize that income when you receive the money. You sell an item, you do a service, you recognize that in your tax return when you receive the cash. The same as for the expenses, you only record them and you pay them, and you record it and report it to the IRS when you pay them. The accrual basis of accounting is a little bit more complex, because now you have to record the invoice, you have to record the bill, and there are good things and bad things about it. If you record the invoice because it's on the accrual basis of accounting, guess what? You have to report that income, even if you did not receive payment. That's the negative part. But the positive part on the accrual basis of accounting is that you also record an expense, and you can deduct that expense even if you didn't pay it. Now, hybrid method of accounting is a combination of the cash and accrual methods of accounting. The IRS will accept the hybrid method if the combination of the cash and accrual method of accounting clearly reflects your income and you use it consistently. When they say they use it consistently, they're saying, hey, if you're going to change it, you had to ask me for permission. You have to get a determination letter and ask me if you can do it. This is very important for companies that are just starting. If you have any questions, this should be the slide that you should review it after the seminar. How is the income taxed? How is the income of my business taxed? You can be a sole proprietor, but if you're going to register a company here in the state of Florida, you can register an LLC. When I did my thesis on my master's degree in taxation, this was my cup of tea. This is what I decided and it was brand new. So that tells you, right, that I'm old. So if you decide to register an LLC and there's only one member, it's only you, automatically the IRS on the letter of acceptance giving you the federal ID, it says that you have to file a Schedule C. But you have the choice 75 days from the day you get the federal ID to make an election to be treated as a C corporation or an S corporation, and you do it through Form 8832. Why would you register an LLC if you want to be treated as a corporation? Why would you register an LLC and if you want to be treated as an S corporation? There are benefits to it, because let's say there's only one member, you decide to be treated as a C corporation or an S corporation, it does not matter. But in a couple of years, you decide, you know what, it's too much work, it's too much money, the accountant is paying me a lot of money to file those corporate tax returns, because if I make the election to be treated as a C corporation, I am going to have to file with the IRS plus the state of Florida. Now, if I make the election to be treated as an S corporation, I will have to file with the IRS only. But you can always go back to being a single member LLC and go back to Schedule C. There's like a little penalty if you do that. You have to wait. Let's say you register an LLC and you decide to be a C or an S. And then after a couple of years, you decide to be an LLC one member. You have to wait 5 years. You have to wait 5 years to go back, otherwise the IRS will penalize you. Now, let's say you register with the state of Florida an LLC and there's more than one member. When you apply for the federal ID, the letter that you receive, which in parentheses, that letter is gold. The IRS will never reissue that letter, so you have to keep it in a safe place. By default, there is more than one member, you will be treated as a partnership. That's the default that the IRS will give you. Now, but you have the other alternative. There's more than one member, automatically the letter is going to say, yeah, you're a partnership, but you can make the election to be treated as a C corporation or an S corporation instead of a partnership with Form 8832. This is very important because it gives you the opportunity to go back to being a partnership. You can never be in a Schedule C unless the partnership is no longer with 2 or more members and it becomes a 1 member. Then you can go back to being a Schedule C. And as a matter of fact, if you file a partnership and there's only 1 member, you're going to get a letter from the IRS saying, hey, you made a mistake. You should have never filed the partnership. Amend your personal tax return and file a Schedule C with a personal tax return. Now, let's talk about C corporations. C corporations, to me, are the safest It protects you against liability. It has a corporate veil. The other corporations, they do, but I like C corporations because it keeps you away from any liabilities or lawsuits. They cannot go after your assets. They cannot do anything to you because the entity itself is protecting you. Again, that doesn't mean that you don't get protections with the LLC, but you will have to have an operating agreement in case there's a liability or sue against the LLC to protect your personal assets. S corporations, on the other hand, they are not registered. What it is that you register a C corporation and then you make an election to be treated as an S status corporation after you have registered the corporation in the state of Florida. This is just a little diagram that tells you that personal taxes, you will have to file, if you're a sole proprietor, Schedule C. If you are one member, Schedule C. But then the LLC, let's go back a little bit, one slide, and all these wonderful things will apply. So this slide is very important. On the other hand, if you file a business corporate tax, you will hear me, if you're my client or you become my client, you would always, I will refer that to corporate tax return, because I'm not referring to the form itself, because that's another thing. A corporate tax return, it depends on the type of entity that you selected with the IRS. It will be a different type of form. For example, corporations, they file Form 1120. S corporations file Form 1120S. LLCs, if it is one member, Schedule C. LLCs, 2 members or more, they will file Form 1065. The beauty of having a corporation or an S corporation or a partnership is that you can have the insurance as a business expense. Now, I have had cases where they go into the marketplace and they want to deduct that in the business. You can do it as long as your marketplace health insurance for you and your employees falls into their business criteria. It's best to call them, make sure that you're selecting the right type of health insurance for you and your employees, and whether you are in the individual side of health insurance or business health insurance. I looked into that when, the marketplace came out for my business to see, thinking that I can do it with as an individual. And they told me, no, you have employees. You need to file for the health insurance under the business umbrella. Let me tell you something about this slide. Did you see that $sign and Uncle Sam? Those are your business partner. The Uncle Sam is your invisible business partner. Business owners have many legal and financial obligations to consider. Federal taxes will be Uncle Sam. State taxes will be the state. And local taxes, it will be the county or the city taxes. And it all depends on your industry. We all obligated federal taxes. Not all companies are obligated with the state taxes. In local taxes, some are and some are not, depends on your industry. Taxes is one of the most important considerations related to starting and growing a business. That is, I emphasize again, every 3 months, sit with your CPA and find out if you already have a net income, and it depends on the structure of your company, how much you should be saving. Right now, corporations have to pay 21% tax if they have net income. If you have an S corporation, the corporation itself doesn't pay taxes, but it's going to be, you will have to pay taxes at your personal level, because S corporations give you a form, which is Form K and the number 1. It's a K1, the same as the partnerships. And that income, if there's income, it flows through to your personal tax return on page 1, whether it's a net income or net loss. So the tax rate that applies for those taxes to Uncle Sam will be at the personal level. Your business needs to meet the federal, state, and local obligations to stay in good standing. The last thing you want to do is owe money to the IRS, the state, and the local agencies. And the reason being is because the IRS and the state will not only charge you for what you owe, you are accumulating penalties, you're accumulating interest, maybe $1,000 turns into $2,000. There's no such a thing as creating a payment installment plan with the IRS when it comes to federal and state taxes or local taxes. You can do that at the personal level, but federal, these other agencies will charge you interest and penalty. As I mentioned before, business structures on location influences which taxes you have to pay. Federal taxes, if you have to pay federal taxes, it will be tax. If you have a net income, it will be against the net income of the corporation. It will be taxes on your payroll or any plans that you have within the company. So it is important that you talk to your CPA at least every 3 months. The same as for estate taxes. I believe I mentioned before that corporations have to file in the state of Florida. If you have a partnership and one of your members is a corporation or an S corporation or an LLC, you still have to file in the state of Florida. So that's why it's important when you sit with your accountant, you say, hey, what's your experience? Have you ever done this before? And don't feel shy asking all the questions, because guess what? You're paying that CPA to help you, not to get you in trouble. And the local taxes, it depends on the industry as well. One of the local taxes would be the licenses, like the local business tax receipt that you have to file. That's a tax, that's a license. Let's call it license. But if you think about it, that's the way of Miami-Dade County getting some funding to support their activities. It is so important to keep up with the taxes that it's so easy to do it through the financial statements, that I am proud to say that we at the SBA Community Navigator Project program, we can help you. We can teach you about financial statements. This is very essential to the financial health of your business, and also could impact your ability to grow your business, meaning that if you are filing tax return, it doesn't matter what form or what type of corporation. If you have losses and you go in for a loan, whether it's a business loan through the SBA or a business loan through a bank directly, if you have losses, they're going to say, how can I lend you money if you don't have the ability to pay us back? Many lenders will want at least minimum, it depends on the bank, minimum 2-year taxes and the current financial statement for any loan request, meaning they will also ask you for financial statements for the 2 years in year to date to see, you know, maybe there's a change, that the chance that you are growing and maybe we will consider you. But think about this. Financial statements gives the banks the opportunity to see what are in the books and how you manage your money. How should you find a CPA, an accountant, or a bookkeeper? How can you find it? The best way that I notice is a lot of clients of mine, they call me and say, hey, you know, I need an accountant, I need a CPA, I need a bookkeeper. I said, look, go to your fellow business owners and do some network. Ask them, how do you feel about your accountant? I'm starting this new business. I need someone that I can rely on, someone that it will keep me posted. In my practice, when I get new clients, I said, did so-and-so tell you how strict I am? I says, yeah, yes, she or he told me, and that's why I'm here. The other thing is that you can visit the American Institute of Certified Public Accountants. I put in the link, and you can even register with them. Just a little tip, register with them, and if you have, and they publish a lot of information for free. So the American Institute of Certified Public Accountants give you information, and the IRS code gives you information. When you sit down with your CPA or your accountant or bookkeeper, find out the industry that they have experience in and ask for the list of services that you provide. Because a lot of accountants, they don't want to deal with payroll. It's too technical, it's time consuming, and you cannot charge that much money. So a lot of companies, they have payroll companies that they do the payroll. And the beauty, for example, I'm just going to talk about one. You can download the entries into, let's say if you use QuickBooks, and you don't have to enter it manually. So that helps. But find out the experience this individual has and in what industry. If they give you their industries and they don't know, or they said, okay, this is the type of business I do. Have you done any tax returns? And to say, no, but accounting is debits and credits. I said, okay, thank you very much. Next accountant, next CPA, next bookkeeper. The other most important question is find out exactly what is that your accountant is going to be doing. Are they going to be doing just the tax filing or more hands-on financial assistance? Financial assistance meaning, are they going to get together with you every 3 months? Are they going to do the bookkeeping for you? Are they going to have the time to have the information on time? Because it's, when it comes to taxes, everything has a due date. And if it is not met, penalties and interest will be accumulating, and they don't wait long. I mean, I noticed that after COVID-19, the IRS, I saw pictures, the agents' desks were full of papers. They were up to here with papers. But the first thing they started to work on, I don't know how they managed to do that, is, oh, you didn't file this form on time, there is a penalty. So be careful. You have to find out for your accountant. And if you can, the hope is that you went to that accountant, that CPA, bookkeeper through a referral. But if you don't, it doesn't hurt you. Give me some recommendations. Give me a referral list so I can call them. It's your money. You're paying for it. So you need to make sure you understand that it is your books with the IRS that they are handling it. Questions you must ask. Who will do the work? That's where the money gets involved. If the accountant is going to do the bookkeeping and the taxes, the fees are going to increase. Are you ready to pay that money for now? If the accountant is going to just do the taxes, you either have to find a bookkeeper and learn how to do the books. And that's where we come in. We'll talk about it later. How will the accountant do the work? Back then, in the good old days, they will mail the information to us. They will drop off the papers and the information was done. But after COVID-19, everything changed. Everything is done online. Everything is through Zoom. And there are apps right now where you can download the receipt for the accountant. The accountant receives it and you don't have to see the accountant, but their clients, they literally want to sit down with you. They want to look at you. They want to see how you react or what you say, but it's up to you, whichever way you prefer. How often will we communicate, meaning between you and your CPA, your accountant, or your bookkeeper? You need to let them know that you want to hear from them as soon as you send an email or as soon as you send a text. Why? Because if you are asking, it could wait until the meeting every 3 months. Again, I recommend every 3 months, but a lot of clients, they prefer once a month. But that you have to ask your accountant, is there going to be a fee for you sitting down with me? And then you have to find out from the accountant, how often are you going to bill me? There are accountants that they don't charge until the work is done. In my practice, many times, I don't charge until the end of the year. Or I have engagement letters where I specifically say, I will not charge you for the whole, I will not be sending you invoices for the year, for the month, or per month, but I expect payment. And when they sign that paper, that engagement letter, they pay. The beauty of it is that you are, as a small entrepreneur, are trying to do the right thing by hiring the right CPA, the right accountant, the right bookkeeper. But you want to know how much it's going to cost you, which I know it can become very expensive if your business structure is not as register an LLC, a corporation, an S corporation, or a partnership, because a lot of clients, they want to create like a holding company and then create subsidiaries. And that's a lot of work. So be ready to pay your accountant. And what you need to do before you meet with this accountant, CPA, or bookkeeper, learn to speak their language, learn our jargon. That's the first thing I do with my clients in the Navigator program. If I'm helping them with payroll, questions they have, I said, okay, this form is called 941. This form is called 940. This call is W-2. So they understand the terminology. They understand where I'm coming from. And the SBA has a list of financial terms, which is very, very interesting. I review all this website before this webinar, so I know their work. One of the tools that you need to have, and that is very important to embrace the understanding of the financial statements, is the company performance. How do you keep track of your expenses? How do you keep track of your income? And income meaning service income, sales income, whatever type of income you make. When you first start, you can start with an Excel spreadsheet, a couple of columns, date, vendor name, what is that you paid for them, or what did they sell you, the amount, and how you paid. And the reason I have the last column, how you paid, is because most likely you're taking cash of your personal account, you're using your personal credit card. This happens a lot when you first start your business. You're using your bank account to pay a lot of expenses. And that money, it is either a loan to the company so that you can get it back when the company is making money and it's non-taxable, or it's an injection to the investment. It could be as paid in capital, whatever the way you want to treat it, but that's the conversation you have to have with your CPA, your accountant, or your bookkeeper. The other one is an accounting software program that it can provide you with payroll software if you plan to do payroll by yourself. Now, let me tell you about the payroll software. It is not expensive, and this payroll software do everything for you. They do the forms, they do the direct deposit, they file the forms to the different agencies, and the fees are not that bad. Now, if you go to a payroll company, the fees will be much higher, and I have seen it. So if you think you can get the hands of the payroll software program within your accounting and tax software program, it is better, but you have to learn how to do it. Tax software, there is a QuickBooks, for example. It allows you to map the accounts to the tax return. Because guess what? QuickBooks was bought up by Intuit, and Intuit has the tax software programs. So literally you can do it, maybe you can do it. And I have a lot of clients in my practice where they do it. And the only request I have is, please don't send it in. Let me review it. Send me the financials, send me the tax return that you prepare. It will be less expensive than me preparing the tax return. So this tax software is mapping the accounts from QuickBooks to the tax return software that this company has. Bookkeeping software, again, it will be some, whoever's going to do in the bookkeeping has to learn how to do it. The beauty of any bookkeeping software is that you don't need to know debits and credits. The only thing you need to know is the date, the legal, and I emphasize legal name used by the vendor, because a lot of them use DBAs when they send the invoice, but you had to find out for sure what's the legal name, and the amount, and this, you put it in the system, because inside the program, they will determine whether that is a debit or a credit. There's several journal entries done at the end of the year to match what was reported in the tax return against what is in the books. And the reason why is very, very important that you request a copy of the depreciation schedule, amortization schedule from your accountant, if you do the bookkeeping, of course, to enter it in your books, so that when you're running financial statements, you have that information included that matches to the tax return. Time tracking software. Let me tell you, I used to work for PricewaterhouseCoopers, and that was the first time I had to use time tracking software. They wanted to know whether I spent doing a tax return, a simple tax return, in 15 minutes or 5 hours, 8 hours. That's the way it is used to determine whether you are profitable, if you are meeting their expectations, or if they need to let you go. Time tracking is also used for keeping track of what every single employee is doing based on the time, because you have to have some guidelines as to what is expected from every employee when they do a task. Project management software, that will be something that is part of the program itself, that it would allow you to determine whether you're doing good or bad on the business, and what if I increase sales for this much? What if I deduct some cost of goods sold in this area? Usually this is for the chief financial officer, which you at the end will be everything. You will be the president, vice president, treasury, secretary, member, shareholder, but there are certain things that if you have employees, my recommendation, don't let one person do everything, because errors can be caught when more than one person is involved. Customer relation management software, meaning how do you communicate with your customers? What's the outcome? What is happening? This is something that is kept by management. Communication software, website building software, payment transaction software. We can run the reports and see where you stand. Those are called advanced reports. And we also have the sales, marketing, PR software, which I'm very proud to say that within the Navigator, and especially the SBDC program, they have excellent consultants. It's incredible the opportunity that you have to have the best helping you in this. And just as a side note, we do provide training in QuickBooks Desktop and QuickBooks Online. I personally am a QuickBooks Pro advisor, so I'm good on both QuickBooks Desktop and QuickBooks Online, but there are other accountants that they can help you within the program. As the owner of the business, you need to have a basic understanding of the three key financial statements. One is the balance sheet, the next one is the income statement, and the cash flow statement. Let's talk about each one of them. This happens to be the balance sheet, and it's just half of it, because what it does, it provides you with information about cash. And let me just go back a little bit. The financial statements, once you enter in the software program, it will produce this balance, statements. What you need to do is learn how to read them. For example, what are current assets? It will be the cash. It could be cash in the bank, cash in the savings account. It could be money market account. Everything is included in the cash account. Accounts receivable. This always will have a number if you're in the accrual basis of accounting. But even if you're in the cash basis of accounting, you can keep track of your accounts receivable, because the beauty, for example, of QuickBooks is that you can keep your books in accrual basis of accounting. Let's say you sell the product. You know that if you sell a product, a tangible product, you have to report sales taxes to the state of Florida, right? And the state of Florida wants the sales taxes to be on the accrual basis of accounting. What is accrual basis of accounting? That you made the sale, you had to report it at sales. But the beauty of QuickBooks is that you can run the report on the accrual basis of accounting, but when you prepare the tax return, you can just, with a click of a button, you put it on the cash basis of accounting. Many times when you have accounts receivable, there are sometimes, not all the time, some clients decide that they're not going to pay you. They just don't want to pay you. So you have a reserve that is called reserve for bad debts, and others call it allowance. This is from CCH. This is from CCH, which is one of the largest agencies that provides information about the IRS code. This agency, what it does, this company, what it does is reads the code itself, and then they sell us little books with the main items for that particular year, which is great because we don't have to go through the IRS code itself. Years ago, it was very inexpensive. Now it's very expensive, but it's important to have if you really want to spend. If you don't have the money, don't do it. Then we have the inventory of the company. The inventory is the assets you have in your warehouse, in your office for sale. Then we have an account called prepaid. That's an asset, because even though it's a prepaid, let's say the rent is due on the 15th of every month, and you pay December is due on the 15th, but you pay before December 31st. That's a prepaid expense. You paid it in advance. So it hits the balance sheet and then it's reversed the following year and the profit and loss statements. Then we have another asset, which are the fixed assets, the vehicles, the furniture, the equipment, and the building. Each one of them has an accumulated depreciation. This is exactly what I was telling you. By the way, land is not depreciable, so that is, land is at cost. So all this information will be in the amortization schedule and the depreciation schedule that you need to request from your account, from your CPA or accountant to enter as a journal entry. Then we have another asset, which is very important, is goodwill. Usually goodwill happens when you have been in business already. Right now, you don't have any goodwill because you're just starting. But eventually, the name itself is going to be worth a lot of money. Then this is 1/2 of the balance sheet. And because the balance sheet is composed of current assets equals liability minus liability and capital. So you add this up, and it should add up to the current assets. In current assets, you have the accounts payable. What goes into your accounts payable? It could be your credit cards. Sales tax payable is what you owe the state of Florida. Payroll taxes payable when you finish one period and it just happens that you didn't pay it because you don't have the due date until the following month. That will become a current liability because you are going to pay the next month. And sometimes accrued wages payable when you created the payroll and you created the check, but it was not cleared. Unearned revenues that's a very tricky account, because if you're on the accrual basis of accounting, that takes care of it, right? Because everything is going to go into service or sales income. Then you have the long-term liabilities, long-term notes. For the people that apply for the SBA EIDL, that will be considered a long-term note payable. That will be considered a long-term note payable. If the business owns a property that is the title is under the company's name, that's the amount that it will be here. Now, if you look at on the top, it says short-term notes payable, long-term notes payable. This will have the largest amount, and then a journal entry is made to report what is due the following year, what was due or what was paid. And then we have the capital account. It is the owner's equity minus the profit for the year. It gives you the total capital, total liabilities and capital. The formula is assets equals liability plus capital. Then we have the income statement. The income statement is gross sales. If you notice, it says gross sales. It does not say sales income. It does not say service income. I personally don't like this gross sales name. I like to break them down, especially if you do service and items, and if you sell items, I have to have an account that says service income and the other one sales income, so I can tell. But if there are many times that the clients are not happy and they return the product, guess what? That will be sales return. Is very clear. The name says sales returns and allowances. The cost of goods sold within the income statement, it will be the beginning inventory plus the purchases plus the freight in. What is freight in? It's the cost of you bringing in those items for resale. Because when you go to the operating expenses, there's going to be an account that says freight out. Freight in is whatever the cost to bring those items in, because that will be part of the cost that you have to consider when you're selling your product. Direct labor and indirect expenses. Indirect expenses could be manufacturing overhead. It could be this list. It becomes larger, depends on your industry, exactly what is that you are selling or reselling. And it is important for this to be as detailed as possible so that you can determine the right cost of your product. And then we have the ending inventory. This information of ending inventory, my recommendation, if you're selling an item, try to keep track of your inventory in a Excel spreadsheet every month, at least by the second of the following month. You close the office for 1-2 hours so you can count your products, so you know exactly, because this adjustment of ending inventory is done at the end of the month or the year. But if you do an income statements for a year, this is effective for what is in inventory. This number right here is going to flow through to this merchandise inventory, because it's the ending inventory that you have to keep track of it. And then revenue minus the cost of goods sold minus the operating expenses, it will give you your net income or your net loss. A couple of accounts that I would like to go over with you here. You see this account that says miscellaneous? I do not like it. I do not like it because you can put everything that you don't know where to allocate into that account, and that makes the accountant's job very difficult and expensive for you, because that account is reviewed and said, hey, where did you put this in here? What is it? So then with the acknowledge this CPA or accountant or bookkeeper have, they're going to record it to the right account. So why do that? It's better that if you get a miscellaneous account in QuickBooks, you have an account called Ask My Accountant. So it's better to put it on that account that's called Ask My Accountant, so to discuss it with your bookkeeper, accountant, or CPA, instead of putting it on the miscellaneous. I have seen miscellaneous for $200. I say, how can you have a miscellaneous for $200? And then when we go over it, it just happens that they were recorded. They didn't know where to put it, and it was properly recorded. Now, if you notice in here, you don't see the word freight out, right? But you do see the word that says delivery expenses. This delivery expenses could be the account that you can rename it freight out, meaning the operational expense of shipping the merchandise you're selling to your client, shipping the merchandise out. Now, here's my cash flow statement. It's a combination, is looking at the balance sheet and the income statement and going backwards. What are the activities? I'm looking at the bottom where it says activities included in the cash flow. Investing activities is in the balance sheet. Financing activities is in the balance sheet. Operating activities is in the balance sheet. So you start with your net income and you make the adjustments. You look at your balance sheet and you deduct your accounts receivable. You deduct what you owe on credit cards. If you had a SBA PP through COVID-19, you have to add it back. Why do you add it back? Because this is not income nor a loss. 99%, 99.99% of the PP ones that I know of, they were forgiven. So you had to put it back because you get the cash. And the payroll liabilities, you take it out. This gives you the net cash provided by operating activities. There was an increase for the period. If you notice, it's the same number. You add the cash, this comes from the balance sheet, and it gives you the cash at the end of the period. Again, this cash flow statement, the balance sheet and the income statement, you can get it automatically, is generated by QuickBooks and any other like Peachtree. It's also another software program that I'm familiar with, that it would allow you to run the financial statements. There are two methods of calculating the cash flow statement. One is the direct cash flow method, and the other one is the indirect. The one that I'm giving you here is the direct cash flow method, which is very simple. You just print the balance sheet, you print the income statement, and you can get that information from those two other statements. To facilitate the understanding of LLCs, corporations, partnerships, or how to create a corporation, I am giving you the IRS guide directly from the IRS website. And I call it LLC IRS guide. Talks about LLCs. The slide that I told you is very important for you to learn. What happens when you are a single member LLC is from the IRS website. Then the election that you will make to treat the LLC corporation or treating it as filing as a partnership. And the beauty of this IRS guide that it gives you the the opportunity to learn that if whatever elections you make with the LLC, you can make the election, and how fast you can go back to being an LLC if it is only one member. I'm also giving you information about how to create what's forming a corporation, the IRS guide. The IRS guide, this is very simple. You want a corporation, you don't want to deal with this corporation, you just don't want to deal with partnerships. Register in Florida a corporation, the name of the company plus the word corporation, incorporated, corp, Inc. It's very simple, and I like the fact that it's totally protection. Not too many people agree with me, but that's my option. A lot of people say no, but the tax rate is 21%. I say, yes, it's true. But I have a lot of clients that they said, you know what, the peace of mind that they're not going to go after my house. Well, they can't go after your house, right? But after my investments, after any other assets that I have, that gives them a peace of mind. I also given you the Small Business and Self-Employed Tax Center, very important. It's a lot of the information that I talked about is coming from here, from this websites. So please take the time to read them. Before you go to bed, just open the link, copy the link, and learn about it. The SBA also gives you information about the structures, about taxes, and how to manage your finances. I think this is very good information that you should visit and learn about it, because once you read the IRS and you read the SBA, you will notice that they both talk about the same thing in different words. That's all. Sunbiz also has a little area that says how to do business in Florida. This is also, the IRS has a link, literally a link. Well, they have it for every state, but when that's Florida related. So it tells you a lot about, the structures and how you should be managing. And also Miami-Dade County have a website, a link. I'm giving you the link on how to start a business. And again, all this information that Miami-Dade County and the SBA is put it on their website comes from the IRS in different words, but it's the same thing.
Yes, Lilian, we have 3 questions. The first one will be regarding insurance or health insurance. Can Lilian elaborate on this, as I am in the process of looking at insurance in the marketplace and want to know about the right steps to take?
All right. The first thing you need to do, you need the marketplace. And you tell them that you have a business, and they're going to ask you several questions. Do you have employees? Do you, and one of the things that you need to learn is that if you offer health insurance for one person, which is let's say it is the shareholder or the member, it has to be offered to all the employees. It can't just be, because I have seen where it is only for the owner. So you need to call the marketplace. The marketplace will give you the details of whether you qualify, the word is qualified, for the business insurance that they offer or the individual insurance that they offer. What I do notice is that many people, they don't know how to ask the right questions. So the agents, they don't understand it. So just be very specific. I have a business, or I plan to open a business. I plan to have employees. So they're going to ask you, how many employees are you going to have? Are you going to offer them, if it is a business health insurance, we have a program, because the marketplace has an individual program, but not too many people know about the business health insurance programs that they offer.
Good. We have another question from Kendra. She's asking if you are providing a consultant service and not a tangible item, how can she put it like in her accountant?
I don't understand though the question, but
She's providing like a consultant service instead of
consulting services is not reported to the state of Florida. Consulting service will be a service income. I don't know if that answers the question.
Okay, I'll put it in the system. If not, she'll get back to us.
Okay.
There's from Sonia, how can I set up a time to sit with someone to help me with the finance structure of my business?
That's what I do. One thing that we do, and I do, is I teach you everything that I just went over with a little bit more of time. But then I send you the websites, which you can find them in here, and you need to read them. You need to decide. Unfortunately or fortunately, because of liability issues, we cannot tell you, oh, register a C corporation, register an S corporation, or register an LLC, because it's your business. We are here to give you guidance. We are not your CPA. We're here to train you, to assist you, but we cannot tell you. I can teach you about the different structures with more detail than this presentation, but the decision is yours. And I have noticed that a lot of clients, once I go over the instructions, I said, okay, I'll get back to you, and they never do. So my question is, if you're ready to start your business, the first thing you need to know is, what is that you sell? And the question is, are you liable if something happens because of what you're doing for a person, for a client? If you're liable, you got to be careful with the type of corporations that you register.
Okay, from Kanda, she's saying that she's offering leadership and personal development services, and how can she claim these devices provided on her return?
Can you repeat the question?
Yes, Kendra, she said that she's offering leadership and personal development services. And she's asking how can she claim these devices provided on her returns?
You mean devices? She literally given them some sort of tangible item to work on what they do, on what she's doing for them?
I'll have to ask her to see more about it.
Yeah, because let me tell you, if she's just providing consulting services, there's nothing to worry about. But if she's selling a product, that's another area. That's, it's part of the device that she's selling. Now, if she's giving them the devices for free, that will be part of operating expenses because she's not selling them. It's not a cost of sales.
Okay, well, what we will do with the rest of the questions, I'm putting on the chat the link. So the rest of the people that have questions, since the time is already over, we're gonna please go to the link that I just put it in the chat to have a consultant session with Lillian, please. Okay.
Okay, so it's over. It's only 1 hour.
Yes, the webinar is already over. So thank you very much to all the people that are already here. Please do a consulting session with Lillian for the rest of the question. Have a nice rest of the day.
Thank you for joining us. Bye-bye.